All right, time now for Consumer Confidential with KTLA 5's David Lazarus.
Good to see you, David. So we're talking about a larger amount of jobs available.
Yeah, which is good and bad. On the one hand, lots of job openings, good thing. Right now, there are roughly 2 job openings out there for every available worker, a sign that the labor market remains very tight and the economy is still growing. But wait, hello, highest inflation in 40 years, series of rate increases to cool things off. Where is the bang for that buck? And that's the issue here. This is the final big economic stat we're going to see before tomorrow's expected 3/4 point rate hike from the Federal Reserve. And if indeed it comes through as expected, that'll be the 4th 3/4 point rate hike in a row. And yet the economy keeps shrugging off all these efforts to cool things down and remains vital and robust and not where we want it. In fact, the tight job market is leading to wage growth, and wage growth only exacerbates the problem, because when wages go up, what do companies do? They raise prices to get a piece of the action, and that just exacerbates the inflationary trends that are out there. So here's where we're at right now with the economics of this. What people are going to be watching for tomorrow when the rate hike is announced is, what is the Fed going to signal going forward? Will they signal, as some expect, an easing up of all the rate increases lest they push the economy into a recession? Or, since inflation seems to be saying, yeah, whatever, will the Fed say, we got more tough love coming down the pike? That's what you watch for tomorrow. But today, jobs numbers strong, not necessarily a good thing.
All right, Uber shares are popping even though the company's reporting big losses.
This is one of those things that just drives me nuts. And I know that I'm kind of a contrarian here. A lot of people, when they look at particularly tech stocks in Silicon Valley, think it's all about growth. It's all about hitting those numbers, showing that you got all the big growth. Me, I'm a little bit old school. To me, it's all about, are you making money? Do you have a business plan that works? In the case of Uber, no and no. The company reported losing $1.2 billion over the last 3 months. On the other hand, the stock is up by about 14% at last check, because Wall Street is thrilled by a different number. 72% increase in revenue as bookings are up and as more people are using Uber, not just for rides, but also food deliveries. And that's great, except the money just keeps flowing out the door. I guess you could say that it's in a sense a good news story, because in the last Q3 last year, the company lost $2.4 billion. So at $1.2 billion this year, sweet, that's a big improvement. But still, over $1 billion over 3 months, there's a real problem there. But as Wall Street would have it, that's no big deal as long as they're growing. What does Uber say? They're predicting more growth and what they're calling enhanced profitability, which I'm taking as we'll lose less money going forward.
Okay. Well, at least they lost less this time.
Yeah, I'm not sure how that qualifies as a success, though.
Right, exactly. All right, so 2 publishers merged, but that got blocked?
No, they're not merging. They want to merge in a potential $2 billion blockbuster deal. Penguin Random House, itself the product of a merger, had been seeking to merge with rival Simon & Schuster and create a huge publishing behemoth. In fact, the U.S. government says if the 2 companies had been able to hitch up, it would represent about half of the entire book publishing market. And a federal judge has now blocked the deal, saying that it creates a substantial risk of reduced competition in the book publishing industry. And that's undoubtedly true. We know for a fact that every time companies consolidate, you get less competition. Less competition tends to lead to higher prices, worse service. You know how that thing works. But let's look at this industry. I mean, the wireless industry has been steadily consolidating because they say, look, we can't compete unless we get the economies of scale that come with being bigger. That's exactly what book publishers are saying, especially at a time when digital technology is eating the lunch of all publishers. And so Penguin Random House, and that's 2 companies that merged back in 2013, are saying if we don't merge with Simon & Schuster, things are going to get tougher for us. And they probably will. So this is one of those weird things. On the one hand, it's true. You would get less competition, and that normally doesn't work in the favor of consumers. But as a book lover, as a reader, I have to wonder what is going to happen to this industry that I love so much that now, like many publishers, is now on the ropes.
Yeah, frustrating.
It is. It's tricky.
1 o'clock, anything good?
Yeah, we got lots of good stuff. The latest on Twitter, and a big oil giant overseas reports massive profit. Guess what? That's your money at the pumps. Oh.